Okay, let's go ahead and reconcile our accounts for the month of January. First, we'll start with reconciling our credit card account, our credit card statement right here. So we're going to go to banking, reconcile. We're going to pick our credit card account right here. We can make sure that the numbers match 6258, 6258. Always good idea to enter last four digits. Statement is 1/31/2020. What's our ending balance? Is $3,724.34. Okay. Finance charges. We don't have any finance charges right here. Alright, so we're good. Still, let's enter the end of the month date just for sake of consistency. And let's click continue. Alright, so now we can see the charges that we booked, and we can see the charges on our statement. So let's make sure we're reconciling everything that's on our statement is essentially booked into our accounting system. So we have our bank transfer payment right here. So let's do the payment. We have our return right here. Those are good. We also have our charges right here, and we previously entered the finance charges, which is 0, but let's click that. So what else we have? We have our withdrawal of $2,500 that we borrowed right here. We have our gas station receipt right here. We have our purchase from online market. We have purchase from soft drinks. You can see amounts match 1 for 1. That's how we're making sure that everything is correct. Alright, and we can see that we're off right here. The difference is $50.01, and this is a financing charge that we haven't booked. We didn't have it in our receipts, and that's kind of the purpose of reconciliation. So what do? How do we enter it? Well, we could essentially enter it through the same way that we entered some of our purchases, or we can enter it through general journal entry. I'm going to go ahead and just stay consistent and enter it as we did previously through credit card charges, right? So let's go ahead and make sure this is selected correctly right here. Our account is alright, see, 21,100. Alright, so we're going to pay to credit first because they're the ones who are charging it. They charge us on 1/7/2020. That's when we borrowed cash. We don't have a reference number in this case, so we can just say loan 1. Okay. So fee. And right here we're going to enter $50.01. And what is it? This is a cash financing charge. So let's go ahead and put it under bank service charges, right? Or interest finance charges. Let's put it under interest finance charges. All right. So what we have is essentially our credit card account went up, right? And as we already know, they go through credits. What else we know? We know that our expenses on finance charges went up as well. That's a fee that they charge us for borrowing $2,500. So 61,700 interest finance charges went up, and our liability account 21,100 went up because even though we incurred the expense, we didn't pay for it, right? It just got added to our credit card. So right here, again, pay attention. This is debit. This is being credited, right? So liability goes up, expenses go up. So we're good here. Let's save and close. All right. And what do we see? We see it showing up right here. All right. So we're going to go ahead and click it here. We're going to go ahead and click it here. And we're going to click Reconcile Now. Again, right here it's asking, well, do you want to pay the credit card? Well, enter the bill and payment later. Okay, well, we can handle it as a separate entry because we'll do that when we handle our bank account reconciliation. So let's go ahead and click OK. And again, it's introducing reconciliation report. Let's do both. Alright, so that's our reconciliation summary. It tells us the ending balance for the credit card, which has to match, right? And it does. Excellent. Let's go ahead and close it. That's our reconciliation detail. Again, as you can see, it matches for what we have on the statement, right? Here's our payments and credits. They're right here. And here's our charges and cash advances, right? Everything on this page is right here. You can go ahead and print it for your records and attach it to the statements. Very good idea. I do it regularly. We can cover it in some other topics that we discuss. Again, let's go ahead and close this. Do you want to record it now? No. We'll record it all later. And that concludes reconciliation of our credit card account. Let's now move forward to reconciliation of our bank account. Let's go ahead and reconcile our bank account for the month of January now. Okay, we're going to go to banking, reconcile. We're going to make sure that we select our bank account right here. Let's pick the correct date for the bank statements. Our ending balance. Alright, let's see. This is another opportunity for us to enter service charges or fee charges. In this case, we have monthly service fee. We could enter it now. I think we should do that so that, again, we have a better understanding of what's going on behind QuickBooks interfaces. QuickBooks is great at making user-friendly interfaces and very convenient, but again, I want to make sure that we understand what's going on behind those interfaces. So in this case, monthly service fee 25. It was charged on 20, and it's bank service fee. That's service charge. That's our account right here. So what just happened? What did we just book after we click continue? Because again, this entry right here, it's actually we're booking something, right? So our bank account is reduced by $25, right? Because they're charging us a service fee. Our service fee expense is going up by $25 as well. So again, one of those situations where we have a debit and a credit. In this case, we're entering amount once, but it serves as a credit for our bank account and as a debit for our expense account 61600, right here. So that's what's going to happen after we click continue. This entry will be booked. So let's go ahead and click continue. And essentially that service charge is right here. Clear it for the next one. So far we have the service fee charge that we can click as cleared right on our bank statement, and we have some charges, and those are checks primarily and a credit card payment. So let's clear those for starters. We have check 1001, amounts match, excellent. We have check 1002, same thing here, amounts match. We have check 1003, that matches. We also have our $500 credit card payment right here. Excellent. So some of the things on our statement are clearly in our accounting system, and we can go ahead and click them as cleared, but some of the other items aren't. And in this case, it's primarily deposits. So let's go ahead and book those. And after that, we can clear them. And the beauty of QuickBooks is that it allows you to book entries while you're reconciling. You don't have to enter reconciliation, and that's a wonderful feature. So let's go ahead and do the deposits. So make deposits. All right. The deposits are going to go into our bank account. What happens when we deposit money into the bank account? Bank account goes up, right? So in this case, our first deposit is $2,300. Where is that money coming out of, right? Well, if you remember, we borrowed $2,500 from our credit card, right? And we kept $200 for operations to have in our check register. And we deposited $2,300 in order to operate this business and open the bank account. So Where did we receive it from? We received it from owner in this case, and it came from cash, because remember, first we took the money out of credit card, it became cash, and now we took part of that cash back. So that's initial investment. It's cash, all right, and the amount of 2,300. All right, so what happened? Again, we're entering in this interface amount only once, but it serves as both the debit for account 1100, for account 11100, and it also serves as a credit to our cash account 10100, because again, we increased our balance with our bank account, but we reduced the balance of cash we had on hand, right? Because we had it on hand, we had $2,500, and we took $2,300 out of it and we deposited it into our bank. So this is what's going on behind this interface, right? Even though the amount is entered once, it's actually a credit to our cash on hand right here, and it's a debit to our bank account right here. So let's go ahead and click Save and New. We're going to book a couple more. Again, in this case, see, we're not clicking anything yet because it's not part of reconciliation yet, right? So let's go ahead and clear it for our next entry. Next entry is cash deposit from sales. So we made some cash sales, we made some credit card sales. Cash sales, we deposit, basically we bring cash to the bank, and let's go ahead and deposit that and book that. So make sure the date is correct. It's deposit, it's received from our customers, and it's our sales account. So again, let's make sure we fully understand what's going on in terms of debits and credits. Our bank account is going up. All right, so it went up by $578.30. What else happened? Well, our sales account went up, and sales and revenue accounts go up when we credit them, right? So we're going to enter that amount right here. You see our debits and credits are in balance. And again, it's very important to understand that even though in this case we're entering amount only once, it actually serves as a debit to our bank account and as a credit to our sales account. So that's the entry right here. Again, QuickBooks is wonderful at creating very good user-friendly interfaces. I want to make sure we understand the debits and credits behind those interfaces. So let's go ahead and click Save New and move on to our next deposit. And again, in this case, we're depositing 2 more sales, so I'm just going to clear amounts, and we're booking them off the statement, which is very typical when you do reconciliation, because some things you track as you go, some things you know that took place, but that's where the statement helps, right? So again, next we have our merchant account deposit. Those are the funds that we receive from customers through credit cards, right? So again, it's still our customers, it's still our sales, but when a merchant service provider, in this case our bank, processes credit card payments, they don't give us the money right away. They hold on to it for a while, and then they deposit it to our account. Sometimes they do it more often than with other customers. In this case, we received it at the end of the month for our first month. Not bad, right? We got our $4,000. That's excellent. So let's again make sure what's going on behind the interface. All right, so our bank account went up, and our sales went up. So what we have here is 41,100 account, our sales account is going up, and our bank account balance is going up because we put some money into it, right? Our merchant service provider deposited some money. So we're good to go for our next one. Let's go ahead and save and new. All right, we have one more deposit to book, right? So again, it's received from our customers. Sales. This one is cash. All right, so again, let's make sure we fully understand the debits and credits behind this transaction. Our bank account is going up. Bank account is an asset, it goes up through debits. Alright, our sales account, sales interchangeably used as revenue, is also going up because we're earning money. And that goes up through credits. So again, debits and credits are in balance, right? We're good to go. That's what's happening behind this interface. So that amount serves both as debit and a credit, but for different accounts. So we're good. We don't have any more deposits to book, so we're going to click Save and Close. I'm going to clear this for our next entry. Voila! And the beauty of QuickBooks, see, these deposits, they're right here. We can go ahead and start reconciling them, right? So we're going to click them right here. And we still have a difference, right? Well, let's take a look. Well, we still have 1, 2, 3 entries that we got to book, right? And we're going to go ahead and book them. And I want to use General Journal Entry interface. And the beauty of this interface is that you can actually see debits and credits. And I want to use this as an opportunity to show you that there are transactions in QuickBooks that you can book essentially using General Journal Entries. Technically, you can book all of them using General Journal Entries, and I'll show you in one of our video series. For now, let's just use it for purposes of booking this. All right, so we have a withdrawal of $300. That's where the owner just took some money out because they needed it for personal reasons, so that's going to be our withdrawal. So that's member draw account. That's essentially an equity account. It reduces the ownership, right? So in this case, the account is debited. So we're going to go ahead and enter it, and I'll explain in a second. What else is going on? Well, our bank account, right here, is being credited because it's being reduced. I kind of did it in reverse to confuse you a little bit, but again, I want you to just pay attention and see. So again, what's happening? The owner took some money out to use for personal reasons. Makes sense. That's why we work. That's why we conduct business. All right. So the member draw account right here, it's an equity account. It's reduced. All right. And then the balance of your bank account is reduced as well by $300, which makes sense. You take out $300 from your bank account for personal use. You took $300 out of your business. So your equity, your ownership is reduced by $300 as well. That's what we have here, right? So let's go ahead and book it. I'm going to clear it for our next entry. We ordered some checks. All right, so let's go ahead and book that. We got to order some checks from the bank. So what happened? Now I'm going to go to the old way, right? So our bank account is reduced through credits because we paid for those checks. What else happened? Well, our expenses on checks went up, and that would fall under, let's see, bank charges, right? Where do we have bank charges? Bank service charges. Excellent. So bank charges a fee for getting some checks to us, so our expenses went up. So what happened? Our expense account, 61,600, went up by 150, and we paid for it from our checking account, and that went down by 150. So those are your debits and credits. Again, with General Journal Entry interface, it's very cool and very simple. You have your debits and credits right here. Everything matches, right? Beautiful. So let's go ahead and save and new, and we have one more to book. All right, the last one is a merchant account fee. Well, because the bank processes payments from our customers on credit cards, they charge us fee, and we got to pay that fee, and they take it directly. So again, our bank account is going down because that's where they took that money out of. How does it go down? It's credited, right? You have to credit your bank account if you want to reduce it because it's an asset. What else happened? Well, merchant fees. Merchant fees are increased. It's an expense. And we have it right here, our merchant fee account. 61,500 is our merchant fee account. It's an expense, it went up. Everything is in balance right here. And again, the beauty of general journal entry interface right here. Debits, credits, everything aligns. We're going to click save and close because it's our last entry. All right, we're going to go ahead and clear it. Alright, so let's reconcile the rest of it. See, the beauty again of reconciliation in QuickBooks, you don't have to exit reconciliation to book missing entries. We just did it on the go. We have them right here. So again, 300, 300, 150, 150, and our difference is 0. All right, we finished reconciliation. We are in agreement. So let's go ahead and reconcile now. We're going to do both. Let's display both. All right, our ending balance, let's make sure that aligns. $4,703.31. Excellent. And our reconciliation detail, let's take a look. Deposits aligns 1 for 1. Awesome. Let's take a look at our charges. They're all right here, right? They align. Perfect. So we're done at this point with reconciliation. You can go ahead and print those reports for your records, attach them to the statements, and we're good to go.